Why do you think this report was so different from the last?
Well, you know, Emily, first, thanks for having me on the show. But I think one of the things that's happening at LinkedIn is they're adjusting to their own growth. They just added a new business line with this learning and development acquisition of lynda.com. And I think they're being cautiously optimistic and wanting to make sure that they're integrating the new product lines effectively. And I think they've caught their stride now. I think they've found their way, and I think they're a little bit more confident in understanding their business, because the new user growth and the amount of engagement of existing users and new users is higher than it's ever been. So I think they're feeling pretty good right now.
Gene, what do you think drove the numbers here? A pickup in demand from recruiters, from advertisers? I know there was a big pickup in the number of job seekers on the site.
If you look at the numbers, what they overperformed in was the talent solutions, which is 65% of their revenue, and that grew at 27% ex-Lynda. And so most analysts were looking for kind of low 20%, so that's where the actual mathematical outperformance came from. I think the biggest takeaway for investors is that they grew registered users at 22%, and that's an acceleration. And that's been the big bear case on LinkedIn, is that there's just something wrong, that people aren't very excited about going to LinkedIn, but the numbers would tell you different, as we're talking about that the engagement is actually doing really well.
Steve, you know, the multi-app approach that LinkedIn is taking, would that help the company on the marketing solution side of things?
Well, it could. You want to engage people where they're spending more time. People are definitely spending more and more time on their mobile devices. And I think what's happening and what we're seeing here is sort of this virtuous cycle, because candidates are more and more comfortable using mobile apps. And I think that the marketing solutions community is getting more comfortable that that's a viable place for them to use and leverage more. So they're going to, I think, feed off of each other.
So, Gene, how do you think the numbers today change your impression of the longer-term story for LinkedIn?
I think it's a big deal what happened today. The stabilization, the improved engagement, the registered user growth. Every internet company goes through a period where investors think that they're going to go for some slow wind down over the future. Everyone has been through it. LinkedIn's going through it right now, and the investors need proof points that things are okay. And I think that the numbers tonight are a good step. I think that there's a lot more to go with the stock, because the part that's unique about this business versus the other internet companies is 80% of the revenue is reoccurring, and other internet companies can't say that. And so I think that the combination of just getting investors more comfortable with the registered user growth is going to lead them back to a higher multiple.
So, Steve, as someone who worked there for many years and helped scale the company from a few hundred to a few thousand employees, what do you see as the biggest challenges ahead for LinkedIn? Because, you know, now that they've reached this scale, there are startups out there that are trying to take parts of this business.
Absolutely. And I think, and Greg could probably speak to this better than I can, the amount of investment that's going into recruiting and the fact that the talent discussions are happening more and more in executive boardrooms around the world. Digital talent and growing this need is rising. So more and more challenges are going to be confronting LinkedIn, I believe, in the future. But one of the really interesting dynamics and one of the stories that I don't think is getting a lot of attention is that a lot of the talent futurists, if you will, are anticipating, and what we're seeing play out right now is people are staying in their jobs less than they used to. And it used to be if you leave before 10 years, you're a job hopper. Today, if you stay in your job 10 years, people think you're getting too stale. And so you're going to see more and more people moving, and that's going to create more and more opportunity for LinkedIn. So I think it's really, as Greg says, I think the upside is even greater than people thought, maybe even greater than the LinkedIn executives thought.
Gene, what's your number one question for Jeff Weiner?
Talent, or when Navigator is going to start to really be a more sizable contributor. It had nice growth in the quarter, but I think that finding these other areas of growth, whether it's Navigator or Lynda, and getting a good read on how they're going to add to the business over the next 5 years would be my question.
And how much of the drop do you think the stock will make up as a result of this report?
Well, I think that a pretty significant one. We're going to go through our model and we'll revisit our price target tonight, but I think it's safe to say is that investors will feel better about a higher multiple just given they're back on stability, back on stable ground right now.